Today, I'll be talking about one of the hidden mechanics of the Income Tax Act, which may catch you by surprise, which could lead you to having to file an income tax return. Residency. For most Canadian domestic students, we know the drill. Filing our income taxes is almost always beneficial, as we often get some money back in the form of a refund or maybe the GST HST rebate. But what if you're an international student who often travels back to your home country for periods of time? How will you be taxed, and on what items will you potentially have tax owing from? Canada, like many other countries, assesses tax on taxpayers via the concept of residency. If you're found to be a resident of Canada, you'll be taxed on your worldwide income for the year. If you're not a resident of Canada, so a non resident, you'll only be taxed on the Canadian source income. And so residency is determined based on your ties to your home country, like where your primary residence, like your home, the location of your parents, spouse, if applicable, and any kids, as well as any property or economic ties such as bank accounts, club memberships. You likely won't be a resident for Canadian tax purposes if you travel back to your home country frequently. However, there is a rule that states that if you stay more than 183 days, sojourning rule, in the year physically in Canada, you'll be deemed a resident, which means that any income you earn from anywhere in Canada has a right to tax that, as well as anywhere in the world. For most students in staff past their 1A term, you'll likely be a Canadian resident for those years unless you have more co-op terms abroad than in Canada. So let's say you travel to your home country frequently enough in the year. So you spend less than 183 days in Canada while performing some TA duties and having two part-time jobs, one in your home country and one from Canada, which, could be remote. So if you're found to be a resident, you'll be taxed on every single bit of every single income. But if you're only a non-resident, which is the case here, you'll only be taxed on the Canadian source income, which would be your UWTA duties and your Canadian source job. So, having heard all this, you determine that, oh, I don't need to file, then that's all right. But more often than not, there are still advantages to filing a tax return, such as potentially claiming refundable credits, such as the GST, HST credit, and the climate action incentive. Also, don't forget that you disposed of Canadian shares. If you disposed of Canadian shares, you're going to have to file.